Hi all from beautiful Stellenbosch in the Western Cape in South Africa. It's still Sunday and we've got a short week ahead of us, so everyone's kind of still in holiday mode. But I thought I'd give a quick update on what sort of I think is going on in the markets. It's obviously difficult to tell going into a new year and quiet, thin trading markets. Everyone's a little confused about what this next year holds, particularly regarding the dollar and things like Bitcoin and gold. And we've got a few trades on energies like natural gas and oil, and a couple of the other softs and grains. So let's have a look at what's going on. Hope you all had a good holiday. If you did, I've had a few days off, which is great. Pretty excited about 2025 and what that holds. So thanks for tuning in once again on Sunday night. Probably most people are on holiday, but if you're not and you're trading tonight and going into this pretty short week ahead of us, let's have a look at what might be happening. I'll start with currencies. You can see we've got a bit of a rally on the euro and the pound. Not much on the dollar yen, although we have some hanging man candles here on the dollar yen on the 4-hour. These are all 4-hour charts at the top here. Getting a little bit of a cup and handle on the 4-hour on perhaps the euro. Let's have a wee look. So perhaps something like that. I don't know. Looking quite supportive. We reached the lower Bollinger Band double bottom there. Looks pretty good. Let's have a look at the day chart on the euro. We have some long positions on the euro and the pound. Quite a significant double bottom here. And actually, if we manage to break up through the 20-day moving average and close above this recent high at about 1.0630, we will then actually have a double bottom confirmed with a new high close. So let's see how we go. Markets will be thin going into this coming week, I suppose, and into the following week is when the real volume will begin. Same sort of thing on the pound. We got a late rally on Friday last week, and not quite a double bottom, but also just probing that lower Bollinger Band. Let's go to the daily chart on here. And similar to the euro, a potential double bottom. That's only confirmed, of course, if we close above this recent swing high at about 1.28. Notice it's also the 200-day moving average, this purple line over here, and it's also a swing low. So a significant level on the pound. There's the 50-day, that red line. So in the short term, we are trying to hold this double bottom, and of course, recently in the markets, double bottoms, double tops, that sort of thing are being quite prevalent across a lot of the instruments that we're trading. This is the 4-hour chart, and the good thing is we've closed above the 20-period moving average on the 4, rejected at this trend line and the 50-period moving average here on the 4-hour. So I think next week will be quite telling, even though it's going to be a low volume and sporadic trading week. Let's go across to the dollar yen 4-hour. So we've got these hanging man candles, a couple of them now, maybe 3 or maybe even 4, and trying to hold beneath this confluence here. It's best to switch to the day chart, and I dare say this is a very significant level. It's not only the 78.6% Fibonacci level, we're slightly above it and holding above it, but it is in that vicinity. It's also the confluence of this short-term rising trend line and the longer-term channel bottom. So it's a very, very good place for the dollar yen to turn around. It's also a bit neat and convenient, and we may have to actually reach this high again around 162. But a rejection here would be fantastic. Let's have a look at the day chart candle on Friday. Just a little inside day and a little inside hanging man. So perhaps this is a turning point. There's been various talk by the Bank of Japan, some of it dovish, some of it hawkish. And as one of our viewers points out, in order for the yen to strengthen, and not only the yen, by the way, the Americans may have to intervene to shore up or to prop up some of these flagging currencies. It's not only good for those countries that need to pay back debt to the US in dollar terms when their currency is becoming less and less valuable, but there are all sorts of reasons for the dollar to actually not gain too much strength. I think the policy going forward for the US is probably not further dollar strength, although it may not be admitted openly. So it's going to be very interesting to see what happens going into 2025 on currencies. Can we see the dollar pulling back a little bit? It's interesting that not only are many other currencies weakening against the dollar, so is the Swiss franc, which is pretty unusual. Swiss franc has reached up into this order block zone, probably a 78.6 or 618 Fibonacci retracement. Let's have a quick look. Yeah, so it's exactly the 78.6% Fibonacci retracement here on the Swiss franc, and reaching up into that order block. One would expect that the Swiss franc would have held its ground a little bit better, but it has not done so. Maybe now is the chance. Let's have a look at the dollar index and see where we are on that. And once again, just reaching up towards the 61.8%, breaking up above this range level, and maybe the top of this range is where we are now, or a fraction higher. There's some jiggery-pokery going on here too, a market structure break. Maybe we've got to touch that before moving down. I don't think anyone wants the dollar to move on higher from here. And we could talk about bond rates and all that sort of thing, and the yield curves and all the interesting observations on that, but I don't think we've got time today being a Sunday. Now let's have a look at the NASDAQ, the S&P, the German 30, and a few of the tech names: Tesla, Nvidia, Palantir, MSTR, MicroStrategies, and Apple. We're short on the NASDAQ now. We were long, if you remember, if you've been following this. We've been a little bit lucky, actually, and not every day do I get these swings timed almost perfectly, but we sold the top, we bought the bottom, and now, seemingly, we've sold the top again. I think we might be able to reach down lower than this previous swing low just a few days ago and get down into some more sensible levels here before a potential recovery. Please go and have a look at X on my observations on the swings or the cycles on the stock markets, growth cycles, if you will. There's a couple of tweets I put up there. Go and have a look at that. Quite interesting. Not statistically very relevant, these observations, but interesting nevertheless. And if you're into cycles, that sort of thing, go and have a look at my tweets on X. There's a few tweets on other things as well, which we'll be covering in this short video. So are we going to get a late Christmas rally like we did last year? Possibly, I don't know. But I think we might need to drop a little bit lower to get a springboard to leap up from. And then the same on the S&P. We've done exactly the same as the NASDAQ. We bought at the bottom. We didn't sell that initial drop from underneath the channel like we did the NASDAQ, but we've now taken profit on that long position and now sold. I think we could get back down towards the swing low, perhaps just below, I don't know, 5,700, 750 maybe. Maybe even just a double bottom here at the 100-period moving average. There's the 50. We're below the 20. We're above the 50. There's the 100 and the 200. And there's the long-term channel. So all sorts of things going on here. And people are expecting a late Christmas rally, even though Christmas is over. And that's what happened last year. So last year was a bullish year. Is this year going to be another bullish year? The jury's still out. We're fully hedged on the German 30. I have no particular view on that right now. Behaving slightly differently to the US indices. We're also short on Tesla. How long that will last, I don't know, but we're down towards these moving average. We're short on Apple and nothing on Nvidia. We could have shorted that too. This is one I'm watching very closely, Palantir, and not only being a defense stock and with the prospect of a less violent world going into 2025. Who knows? Let's hope so. But we've got a 3 trend line approach to this right now. Got a flat bottom trend line, or not flat, pretty steep, but the shallower trend line down here, a steeper one there, and this red one that we're trading above still. We're also still outside the top 2-period Bollinger Band, 2 standard deviation Bollinger Band, and well above all of these moving averages. So correction is due. Like I said, if there's going to be a more peaceful world and a less suspicious world, Russia, China, America, then perhaps you'll see Palantir break this trend line. I'll be waiting for a break, a retest from underneath in order to sell. So break and a retest, something like that. Terrible squiggle as usual, but you get the idea. So we want to see a break and a close beneath there, a bounce back to the underside, and then a move down to the second angle trend line, the shallower trend line. So that's Palantir and stocks. Generally bearish until we see these reversing back up again, potentially, possibly looking for a Christmas rally. I'm not too sure. I think we might be very, very near the top. Go and have a look at my tweet or tweets on X. I'm not sure if they're called tweets. I think they're just called posts now. Going across to metals and crypto, I think I'll cover gold and some of the other metals later on. As you can see, platinum and palladium both flagging still, and gold a little bit in betwixt and between. I think we might have to see another drop. Let's just zoom in on gold quickly, just very briefly. Not looking strong, more of a bear flag than anything else. We're long from that position. We took some off there. We got a little bit long again, and maybe just a dip down to somewhere down around about, I don't know, 2,480. And perhaps at a push, we could just get a spike down into slightly lower levels. I'm not too sure about gold. All sorts of factors affecting that, including risk on, risk off, and central banks buying and selling. I think there are more exciting things to trade right now. Now, Bitcoin, I did some tweets on X again on this. I think this is the most likely path. I honestly don't think this is going to drop to 65 or 80,000, which is what a lot of people think. Somewhere down here, the 100-period moving average, or the 200 down into 70, perhaps the order blocks down at 60, or this long-term trend line all the way down here at about 65. I don't think that's the most likely scenario. And there are all kinds of reasons for that, and I'm not going to go into it. But I think this is more likely, that we do undercut this very, very unpleasantly neat. I say unpleasantly because neatness is not preferred by the markets. Chartists like neatness, but the markets don't. So I think we might have to undercut that low, clean out a few very nervous hands, by the way. A lot of nerves creeping in, the fear and greed index swinging towards fear quite quickly, sentiment draining away on Bitcoin as the weak hands start to bail out, and even some of the stronger hands and some of the firms. So are we going to see a little dip below there? Possibly, maybe not. We're still long. I haven't hedged any about Bitcoin just yet. But if we drop below there, and don't manage to reclaim that very, very quickly, then I'll consider this level to have failed and we'll probably move down a little bit lower. Look at all these tendrils dangling down, and you might say, well, those are all spikes, wick lows. It's very supportive. It is in a sense, of course, in the traditional sense, but it also means that we're constantly probing down and reaching down towards that level and not giving up on that idea. So perhaps these tendrils or wicks or spikes are pointing towards a bit of a false spike or even a longer term correction. I don't know. But for now, there's nothing much to do, and I'm holding on to my long positions. I think Ethereum will behave in a similar way. People are claiming and trumpeting that the alt season has arrived. Perhaps it has. Big spike on Ethereum that we didn't see a single spike, that one over there, which bodes well for Ethereum rallying from this sort of level. Notice that it's a single spike, and when we compare that to Bitcoin, this is more of a constant probing and testing the resolve of the bulls. If the bulls should falter and give in, we may see this on Bitcoin, bit of a spike down below that level before more buyers creep in. People are saying, well, BlackRock's offloading, this company's offloading, that company's offloading, and I think the only reason they might be doing that, not because they don't believe in the future of Bitcoin, of course they do, but because they might want to be buying this at a slightly lower price. If some of the big institutions and firms and hedge funds and market makers like BlackRock can get a dip down into, 90, 85, something like that, I'm sure they'll be lapping that up as a cheap buy on Bitcoin, looking for a target of around 120 to 140. Now, these are Fibonacci extensions. There's one roughly around 120 and one roughly around 140. And if we do get a wiggle on, and there are all sorts of reasons to believe that we could have a sudden surge before a big pullback, then perhaps 140 is a more likely target. I also bought some Ripple last week, edging into a Ripple trade. Once again, quite a complicated setup here, but generally I think this is forming a bull triangle. We've had the surge. I think we're going to get another surge coming up soon. I'll talk about XRP and Ripple, perhaps when we get back into the full swing of things into early new year. So in essence, I'm still bullish on Bitcoin. I'm bullish on Ripple, new positions on Ripple, XRP, and still quite small. But if we do get this moving up from $2.50 to $5 to $10, then we don't need much size on that, and we can add on the way up if we need to. Let's go across to natural gas. Quite a few questions coming through on this. My last tweet on this and my last trade entry are well published, so you know where those are. We got long over there. The market moved down, undercut that level at that low, stopped quite a lot of traders out. I saw stories all over the show, people going short, people getting stopped out, only to bounce back up again, not only once, but twice. This is the 4-hour chart on my Black Bull broker tracking the Henry Hub price. That was my rollover. Let's have a look at the Henry Hub itself. As you can see, the rollover is represented by a big gap down. It's a rollover gap, doesn't necessarily need to be filled, but we're bullish in any case. We bounced off this moving average, or trying to. There's the 200 period moving average I'm talking about. A couple of short-term moving averages. There's the 100. The 50 and the 20 are still above us. We have a trend line here with one false break. That was the false break we spoke about last time that got a lot of traders taken out. Perhaps this is another false break doing exactly the same thing. If you remember, we went long here, everyone got short on the break, we actually added to our long position and got out near the top. Maybe the same thing's happening again. It's quite a well-established trend line, this, and despite that false break and potentially this false break, I think we're going up. I believe there's some very cold weather coming along in both Europe and the US, some polar vortices, as they're called. It's interesting, I've still got the green squiggle and the red squiggle on here. We never got quite down to that level, and we're holding above it pretty firmly right now. So I guess I can take these off because they're sort of clutching up my chart. Let's get rid of them. They've been around for weeks, if not months now. And we can get rid of some of these trend lines, which are not going to be used again. And that's where we are. So quite a neat pattern, really. And what's going to happen tonight in a few hours' time, actually in about 8 or 10 hours' time from now, are we going to gap up towards this 50 MA and the swing high and then see what happens there? Also the 20 coming down. They'll meet at the same time, I guess. So that's going to form a significant resistance at about 3.5, 3.54, if we gap up towards that swing high, and where the 20 period and the 50 period simple moving averages will probably meet up on that occasion. So we're still long on natural gas, holding that one, and it's looking quite good. At the same time, we're also short on WTI oil. Nothing's really changed. We've been selling the pops on every occasion, almost the entire year, and without exception, we've been successful. So pretty good. Can we carry this on into 2025? I think we could. I think we're going to see some escalation in the price of natural gas, maybe fueled initially by the spurt in the weather, cold polar weather, but also fueled by a demand for export from the US of LNG. And when it comes to oil, perhaps just an idea that there's going to be more drilling, more oil around, bigger supply, and cheaper oil in the US due to the Trump drilling, baby drill type thing. So that's where we are. Same with Brent crude. Uranium, we remain long. These are not huge positions. And as always, it's probably just going to dribble around, bump around for some time. And I think we might find support here. I'm looking to add some more to this, actually. And if we get a bit of a wiggle on next week or the week after, depending on what's going on over the shortened holiday period, above these moving averages, I might start to add some more onto URA and also UEC. Notice we're above the 20 and the 100 period moving averages on both of these on the day chart. Always good support on these sorts of commodities for long-term slow uptrends, which is, I think, what we're going to see on uranium in general. And so we'd be looking for this sort of area to support. Maybe a sharp dip down just through those moving averages down to about, 6.4 on UEC, just to get down to that 50% retracement level. We haven't even got there yet. And then on URA, just quickly going back to this chart, we're at the order block now, and we're actually below the moving averages. So a good place, and also the 61.8% Fibonacci level. So I still like those trades. Looking to add some more onto those actually when we get a chance either next week or thereafter. Now, cocoa. Let's have a look at softs and grades. Start with cocoa. This is the one that people are most interested in. Big pullback last week. A little bit of a double top, as some people pointed out, depending on your pricing. This is the continuous price of Pepperstone. Now, let's have a look at where we pulled back to. The top of the megaphone pattern. Hope you can see that megaphone denoted by these expanding lines here. That was the pattern that should have held and didn't. We broke out of there and we had to hedge our position on that breakout. I have not adjusted this position so far, not knowing where this would top out and not knowing where it'll pull back to. But now that we've pulled back to the top of this megaphone, I expect we should get a bit of a bounce here. And I expect we could see something like that, at which point I will unhedge this trade and maybe a bounce back up to this red line, this swing high and congestion area about 11.5, and then move down. I might consider unhedging or adding some shorts there, depending on the 4-hour price action and daily price action. Or if we break down through the top of the megaphone, we might actually have to see another sort of a breakdown, a bounce to the underneath, maybe a little fake through the top there, something like that. Whatever it might be, any one of these sorts of patterns, I'll be looking to add to my shorts, take off the long hedge, and then hopefully ride this down. Looks like it's moved down a long way, but it hasn't. Look how far we are, and massive moves at the top. Even if you convert this to a log scale, you can see how dramatic and messy, violent, and almost untradeable this whole top area has been. So let's see how we go. I'll leave it on the log scale for now. That's the sort of thing I'm looking for. We'll unhedge as soon as we get the chance and add that 50% hedge back onto the trade to shore up our short for a ride back down. We'll start with some of these trend lines, maybe the top of this black one and this horizontal line here, down into about 8,200. First of all, we've got to get to 9,500, this support and resistance area here, and then down towards these lines. I've got no moving averages on here because they just don't make sense in this sort of market. We're also still long sugar. This has been disappointing. I don't know what's going to happen today. We pulled back to about 78.6. Let's see how we go. Still very low price. We're long on soya. This is a great trade so far. But a little bit of pullback on Friday. As soon as we close above there and above there, that's around about 1,000, and well, initially 1,000, and then thereafter we've got 1,033, and then thereafter we've got 1,070. As soon as we start closing above these levels, I'll start adding to my long position on soya. We are long already. We're long on wheat. Despite the fake breakdown through that support level, we've reclaimed it now. We're still underneath that long-term trend line. We've still got the breakout, pullback, trade setup going on here. All very weak. Lots of room for these prices to move up. We're long on wheat, we're long on soya, we're long on sugar, but we are short on the luxuries, I suppose, cocoa and coffee. We're still short on coffee. This is broken back down through the trend line, very short-term trend line. There's our short position. We haven't got enough on this yet, and as soon as we start moving down a little bit lower, perhaps breaking down through this swing low at about 290, and then particularly down through this channel bottom, we'll start to consider adding more onto coffee. We're also short on orange juice, and quite frankly, this is a boring and a nothing trade. It has been for a very long time. In fact, the entire year. I don't really want to comment on very boring topics like orange juice. We're long on corn. This has been one of our favorite commodity trades. We got long on the breakout, pull back, enter. We're looking to hedge some of it over there, that swing high, maybe partially or fully. I'm not too sure at this point, depending on the price action, how we approach that line, whether it acts as a price magnet, whether we just smash on right up through it. Very cheap corn right now. We're long from a good low price. And cotton, we've been in the range between the two green lines most of this year so far. And we added a little bit more on the last dip down to the bottom of the green line. We're still around about there, but we're holding the green line. until we get out of this range, there's really not much else to say about cotton. The cotton farmers will be looking for this to move up quite sharply, as will some of these other commodity farmers and traders. Right, now let's go into a couple of the other things here. The Rand pairs. I'm not in any of the Rand pairs. There's nothing interesting for me to look at just yet. I'll comment on these next time we do a full analysis. And then VIX, I put up a tweet last week saying that I'm interested in getting into VIX longs, but not just right at this point. And I'm looking for something like this. A bit of a squiggle along the bottom here and then an eventual rally. Maybe we do get the Santa Claus rally in stocks, and that keeps the VIX low for another, 3, 4, 5, 6, 7 weeks, something like that, and eventually a bit of a sell-off on the stock market. I think we are due, but I'm not too sure about the timing, as is no one. One is never sure about the timing in any market. Now let's have a look at TLT. This has been the most frustrating. We're still long. However, we do have a trend line breakout, a very long-term trend line breakout. We broke out through there. We took our longs in the breakout. We got above all of the moving averages, the 20, 50, 100, 200. And we've now slumped back down below them and below those initial entry points. However, technically, we're still in an uptrend because we're above the downward sloping trend line. Sounds a bit weird, I know. This is the path I have envisaged, and maybe we'll still get it, but we'll probably have to drag this along to the right somewhat. Something like that. I don't think we're going to get below this low here at 82. It's possible we could get a spike, a brief spike down to about 78, 79, something like that. I don't think so. I think we'll probably try and hold here. This is a Fibonacci retracement level as well. We're very close to the swing low. I think this is the 61.8% Fibonacci level. So let's see if we hold going into next year. Once again, we talked about the dollar, and it's not good for anyone having the bond rates as they are and the dollar with its current strength. It's not good for the countries around the US, and it's not generally good for the US either. So that's it, folks. Good luck for the opening tonight. Probably a very low volume opening. If you enjoyed this video, I'd really appreciate your like and subscribe. It would be a wonderful Christmas present for me, and I'll see you in the next video. Take care.
Stocks rising, markets parabolic. Bag me some cheddar, ain't no alcoholic. Charts looking sweet like a dodgy pie. Strategies tight, made a one fly guy. Fingers on fire, pockets getting deep. Gravy boat overflowing, losing no sleep. Stop loss in place, man, I'm wrapped up good. P's and Q's proper, no misunderstood. To the moon, diamonds in me hands. Forget the fun, I'm the man with plans. Profit traders popping, no time for scams. Ride this rocket.